Hi, this is Steve Dale, and I'm recording this on January 10th, 2021. And what I want to talk about here is Proposition 19 and planning for a loved one with a disability. This is actually part two of a three-part series. And today, in this portion, I'm going to talk about portability of a property tax base of a primary residence if the owner is over 55 years of age, severely disabled, or the victim of a wildfire or natural disaster. This is the second part of a three-part series, and the last part that'll come after that will be planning issues with the Special Needs Trust. So it's really important to understand that the following is for education purposes only, and it's not meant as a substitute for legal counseling. Many of these rules being discussed are subject to changes in interpretation. So a couple things just to review as we jump into this. There's two major changes that are going to take place. What we covered in the previous video is that there are changes to the parent-child exclusion here. But what we're going to cover here are changes to the transfer of taxable value for certain property owners, or what I like to call portability. The dates of enactment also are important here. That as far as the portability is concerned, that's going to be operative April 1st on 2021. Now the materials, many of the materials that I'm going through here are from the Board of Equalization here. And so let's get into this. Let's talk about portability. Okay, so as the BOE says, the base year value transfer for property tax purposes beginning on or after April 1st provides the owner of a primary residence who is either over the age of 55, severely disabled, or the victim of a wildfire or natural disaster may transfer the base year value or their property tax value of their primary residence to a replacement primary residence located anywhere in California that is purchased or newly constructed as that person's primary residence within 2 years of sale of the primary residence, regardless of the value of the replacement residence. So in the materials, you'll see that they refer to the property tax base as the factored base year value. So what is that? The factored base year value here of real estate is the market value as of 1975, which is when Prop 13 went into effect, or is established when the property last changed ownership or was modified due to construction. These amounts the amount is then increased by no more than 2% a year, which is referred to as the factored value, to determine the factored base year value. So, if the replacement residence is of greater value than the original primary residence, partial relief is available. Okay, the new base year value of the replacement value is the sum of the factored base year value of the original primary residence plus the difference between the full cash value and the original primary residence and the replacement value of the new residence. As I said in the previous email, what's really cool about the BOE materials is they give us examples. So let's say we have a homeowner who is over the age of 55, but it could be a homeowner who is disabled, who sells a primary residence on June 28th, 2021 for a full cash value of $700,000. At the time of sale, the single family residence has a factored base value of $225,738. On July 22nd, 2021, a replacement primary residence is purchased for a full cash value of $800,000. Since the full cash value of the replacement primary residence exceeds the full cash value of the original primary residence, the difference in full cash values must be calculated and added to the transferred factored base year value. So basically in this situation, the homeowner is buying up, so the difference is $100,000. So basically what happens is you take the $100,000, the buy-up value, add it to the 225,738, and that means that the property tax will be based on a value of $325,738. So anyway, that's how that's done. Now, one of the things that also comes up is that you can make this transfer 3 times. So under Prop 19, a person who is over 55 years of age or severely disabled may transfer the base year value of the primary residence 3 times. Now, as it says in the BOE memo, the language in Prop 19 is not clear as to whether or not whether the 3 times would include a previous transferred base year value, or if the 3 times would be in addition to that. So these provisions, according to BOE memo, are subject to applicable procedures and definitions as provided by statute. And the BOE anticipates that the legislature will clarify these procedures and definitions through future legislation. Now the question comes up, what is severely and permanently disabled? Well, the tax code says here that severely and permanently disabled is any person who has a physical disability or impairment, whether from birth or reason of accident or disease, that results in a functional limitation as to the employment or substantially limits one or more major life activities of that person, and that has been diagnosed as permanently affecting the person's ability to function, including but not limited to any disability or impairment that affects sight, speech, hearing, or the use of limbs. I sort of anticipate that anybody who's getting SSI based on disability, or SSDI, or childhood disability benefits, or Medi-Cal based on disability is going to qualify. So, another really cool thing about the BOE memo, which you can find at www.boe.ca.gov/prop19/ here, is that, as we'll see in this comparison table, as far as the value of the property here, or timing, that hasn't changed. So this is limited to the principal residence, not a vacation home or something like that. Here, and the timing is over a 2-year, that you have to be able to claim this within 2 years. The location has changed because under the old rules, you had to move within your own county unless your county was part of the 10 counties that have an inter-county ordinance. Now you can move anywhere in California after April 1st, 2021. As far as the value limit under the old rules, once again, it had to be equal to or lesser in value, and it had these graduated dates. Here, under the new rules, it is any value here, but any amount above 100% is added to the transfer value, which we just went through that example. How many transfers can you make? Under the old rules, you could only do it 1 time unless you had done it for age and then a second time for a subsequent disability. Under the new rules, this can happen 3 times. And then as far as implementation, here, the new rules go into effect on April 1st, 2021. So anyway, I want to thank you for watching this. And our next video will be on planning for a person with a disability using a special needs trust. Thank you very much, and happy advocating.